Welcome to Looking at the Markets with David Modell. Today's topic is stock trading strategies. Buy low, sell high, or buy high, sell higher? Well, let's talk about it. All right, I want to talk about two different philosophies in trading and investing. The first one is mean reversion. So what is that? Mean reversion is the idea that stock prices, when they go up a lot or when they go down a lot, will sooner or later revert or go back to the stock's mean or typical, normal, or average price range. The underlying belief is that the stock market tends to overreact. This overreaction is the most noticeable when the market goes down sharply and suddenly. The idea is that investors will calm down, people will come back to their senses, and stocks will go back up to their typical price range. The catchphrases of mean reversion are buy low, sell high, and buy the dips, sell or short the rips. Now, the other philosophy is trend trading. Trend trading, sometimes also known as momentum trading, is the idea that stock prices, when they go up a lot or when they go down a lot, are likely to continue in the same direction, as the stock is believed to have momentum. The underlying belief is that, much like swimming against the ocean tide, fighting the prevailing market trend is a losing battle. The idea is that you'd be better off riding the trend, much like a surfer taking advantage of a strong tide. The catchphrases of trend trading are buy high, sell higher, the trend is your friend, and don't fight the tape, referring to the price, because the price used to be shown on ticker tape a long time ago. However, like mean reversion traders, trend traders also have been known to buy the dips in a strong bull market. So, unfortunately, to make things more confusing, the same stock can be viewed as trending up or down depending on the time frame. So let's take a look at Apple stock from different time frames. All right, this is a multi-year time frame, about 3 years of Apple stock price action. And as you can see, depending on how you look at it, on a multi-year time frame, Apple stock can be viewed as trending up because it went up 77 or 78% during this time frame. Okay, but if we close in on the chart and just focus on more recent price action, we can see, or we might think that Apple stock is trending down because in the last year or so, Apple has gone down 18+%. But if we pull in the chart even more and go for an even shorter time frame, we might go back to saying that Apple stock is trending up again, because in the past couple of months or a few months, Apple has gone up over 19%. So, what is the trend? Is it up? Or is it down? Or is it up? Depends on whether you pull the chart back or whether you look at the shorter term time frame or longer term and identify what exactly the trend is. Well, what about the overall market? Looking at the chart of the spiders, SPY, as representative of the overall market, because it tracks the S&P 500, determine whether the market tends to trend in one direction or revert to the mean. You could make a case for either one of those ideas, depending on where you look at the chart and how you interpret the price action. All right, so for example, Let's say, okay, let's say you're here, right, back in 2015, and you see the market going down, right? Well, if you bought here because you think the market is trending down, then hey, you were kind of right because it went down more. Okay. So if you bought here because the trend is going, I'm sorry, if you shorted, I apologize. Let's say you thought the market was trending down and you shorted here. Well, you were kind of right because it went down more. On the other hand, if you shorted here because the market is trending down, you would have been wrong because it went up. All right. If you had, let's say, bought here because you'd say the market is trending up, well, you would have been right because it went up more. On the other hand, if you bought here because the market was trending up, you would have been wrong in the short term because it went down. So, depending on where you look at the chart and how you interpret it, you could say the trend is your friend, or you can say it always reverts to the mean. Uh, if you had if you had gone long here because the trend is up, you would have been right. All right, but if you had gone long here because the trend is up, you would have been wrong in the short term because it went down. All right. So, or if you had shorted here because the market was trending down, you would have been right. But if you had shorted here because the market is trending down, you would have been wrong. So who's to say whether trend trading or mean reversion is right? It seems like it depends where you buy or where you short, and it depends on your time frame. And this is also true on a longer time frame. Okay, if we pull back the SPY chart, pull it way back, all right, decades long here. Yeah, if you had, let's say you had bought here because the trend is up or the overall trend is up, well, you would have been right because it went up more. But if you had bought here or here because the trend is up, you would have been wrong. Okay, it reverted back to the mean, went down. Yeah. So, or if you know, if you had gone short here, if you had shorted the market here because the trend is down, well, you would have been right for a while. But on the other hand, trend trading was right in that instance. But on the other hand, if you had just held on, it reverted back to the mean. It went back to the average price. It went up and up and up. On the other hand, you could say the trend is your friend because it kept going up and up and up. And lately the trend has been your friend for the past few years. So who's to say who's right? It trends in a certain direction, but then it goes maybe too far, and then it mean reverts. But then maybe it goes down too far, then it mean reverts back up to its normal price range. Who's to say who's right or wrong here? Well, here's another SPY chart. Looking at this candlestick chart, and this is for about 5 or 6 months here, we can see 3 instances in which buying SPY at 210, which would be considered trend trading during an uptrend, would have resulted in short-term losses. So let's take a look at that. If you had bought right here at 210 because you see a strong trend upward, that wouldn't have worked out so well because it went down. And here it hit 210 about here, and then went up a little bit more, but definitely wouldn't have worked out too well if you had bought around here because you said the trend is up, okay, but you would have been buying at the top here, at least the short-term top. And then it hit around 210 again because the trend was up supposedly, but then you wouldn't have done too well in the short term. On the other hand, buying at 210 a month ago, like let's say right here, that was about a month ago, would have resulted in steady gains. All right, so buying at 210 here, you would have done pretty well because it went from 210 to today it's around 218 and a half if you had bought and held on. So buying at a high price sometimes does work out well. You could have even bought at the all-time high right about here, and you would have done okay. You would have profited from 213 and a half to 218 and a half. You would have made about 2.5%. Not too bad actually. But you know, on the other hand, if you had bought at the short-term top here or here or here, that wouldn't have worked out too well, at least in the short term. Personally, I like to buy short-term dips within an overall uptrend. So I guess you could say that I use elements of both mean reversion and trend trading strategies. Ultimately, I think it's a matter of your personality type. I've always been something of a contrarian, meaning I like to do the opposite of what the crowd does, and a bargain shopper. That's just how I've always been. So mean reversion has generally been my preference over trend trading. So what's the takeaway? Mean reversion and trend trading can both work as long as you have a workable trading plan in place. Proper planning and the right attitude will increase your chances of success regardless of your trading philosophy. And if you'd like help with your trading philosophy or putting a plan into place, I can absolutely help you with that. My name is David Modell, and you can contact me anytime at davidmodell@gmail.com. If you like this video, and I hope you weren't looking for a specific answer. If you were looking for me to say trend trading is right or mean reversion is right and the other way is wrong, well, it's not that simple. Okay, sometimes one works, sometimes the others. You just have to have a trading plan in place, and you just have to place your bets. And if it works out, it works out. If it doesn't, it doesn't. But if you're hedging properly, if you've got a good plan, then you can profit either way. But if you like this video, and if you want to learn more, you can contact me. You can give this video a thumbs up on YouTube. You can leave comments, that would be appreciated. And you can subscribe to my channel if you want to get more of this educational content that I like to put out. So thanks a lot, and I really appreciate it and hope to hear from you soon.